I like how you whoop, whoop. Welcome to Market Makers, everybody. Our Thursday transmission is here. The cryptos are breaking out, hitting our targets. We're going to cover Bitcoin, Ethereum, and Solana. And of course, we're going to cover the markets because they're right back at that peak resistance level, awaiting our long overdue correction. We want to see how these are setting up in the charts. Guys, I answer all the questions, as you know, in the YouTube comments, or at least I try to get through all of them. We had a ton this last time, but two of them were really good. And I found myself typing out these like 5-paragraph answers. If you go back and look, I typed some long answers, but I just thought I'll cover them here in the monologue because I think a lot of people might find this interesting, my answer, my reply to this. One of the questions was, why is this business cycle, why is this economic cycle taking so long to play out? You have the boom bust cycle, right? You have growth, you have topping, then you have decline, and then you have bottoming. So that's one question. The second question was, how did we get here? Which is a much more nebulous question, but I thought I'd tackle both of these here in the monologue. So I'm 45. I was born in 1978. We got to rewind the clock a little bit. In the 1970s, we had Arthur Burns at the Fed. Arthur Burns was battling inflation. He ended up creating stagflation. It was a lost decade, right? He would raise rates, inflation would come down, then he'd cut rates, inflation would go back up. Paul Volcker comes in, I think, in 1979. My parents get their first house shortly afterwards. Their first mortgage was 17%. You know why? Because Volcker raised rates to 20%. And now you may say, hold on a second, Brendan, hold on. Inflation back then was 13%. Our inflation only got to 9%. And I would counter that with Larry Summers, who's an economist, who was the Treasury Secretary under Bill Clinton, who was also the former president of Harvard, took our CPI in the modern day, because as you guys know, the Fed has tinkered with the CPI. He took our CPI, brought it back to 1980s, and came up with 9.1% inflation. The exact same inflation number we have now. So with 9% inflation, according to our current CPI, Volcker raised rates to 20%. Volcker caused 2 recessions and crashed the stock market. And what did Powell do in the modern market? With 9% inflation, Powell went to 5.25% on the Fed funds rate. 5.25%. So Volcker went to 20 with the same inflation. Powell went to 5. So what's that the equivalent of? That's the equivalent of a midget strangling you, very strong midget, strangling you, but you're a big, strong guy. You can still walk. Eventually it becomes cumbersome. Eventually your body will keel over, lack of oxygen, blood flow, whatever. But what Volcker did was akin to taking a baseball bat and hitting you in the stomach with it, and you fell over instantly. Now you may say, Brendan, you can't do that in modern day politics, modern day economics, because the stock market would crash, all the layoffs would ensue, and that person would definitely not get reelected president. Well, let's cover that again. Reagan was a newly elected president. Volcker raised rates to 20%. Volcker caused 2 recessions. Volcker's considered a hero by economists, as you know, at the Fed. And what happened with Reagan? Reagan ran for re-election with 2 recessions and a stock market crash, and he won 49 of 50 states. I think that's the second or third time in U.S. history. It'll never be done again. Second or third time in U.S. history, a president won 49 of 50 states. So obviously well beloved by the people. What's a large catalyst for that? The fact that prices come down with deflationary events. Recessions are deflationary. Prices came back down. That's what we don't have right now. What we have now is a slight strangulation hold on the economy right now, and you have slowing of inflation going up, but prices haven't come down. This is why when you look at trueflation, Lee, throw that slide up. When you look at trueflation, the dollar is down, 20% just since the pandemic. So a family living off of $100,000 is literally living off of $80,000. But if you turn on Bloomberg this morning, what does Bloomberg tell you? Bloomberg, CNBC, the narrative, the Ponzi salesman, they all say the same thing. The money managers come on and say, well, inflation is on a downward trajectory. This is really good for the marketplace. Prices have not come down. You've lost 20% of your purchasing power. Groceries are 20% up to 30% up across the board. Bloomberg brought on a big restaurant CEO. They own Applebee's, they own IHOP, and something else. And they asked him about inflation. And he said, well, after the pandemic, we had to raise prices 8 to 9% a year. But what we're hoping now with inflation slowing, we can just go back to the normal of raising prices 2 to 3% a year. That's compounding, guys. They raise prices 18%. They're looking to raise them just 2 to 3% a year. So again, everything will cost 20+% more across the board. He said prices for the inputs of the restaurant, materials, food, things they need to buy have gone up 20% across the board. Again, the truflation number, the dollar has lost 20% of its power. This is why you see Biden struggling with record low ratings right now at this term in his presidency when it comes to handling the economy, because the average person, the average family on the ground who lives in this economy is struggling. And people on business news, the narrative of look at the market, it keeps going up, all-time highs. People on the business news don't understand that because they're not living paycheck to paycheck like 66% of Americans. This is something very important that everybody should really understand. This 2% inflation target that Powell talks about, the Fed governors talk about all the time, this is a made up target. The Fed was founded in 1913. From 1913 to 2012, we never had a 2% inflation target. What happened was the prevalence of bubbles that have occurred over the last 20 years. Greenspan came in, I think, in 87 with the market crash just before it. Greenspan started the interventionist Fed. Then we had 87. Then we had Y2K, obviously massive markets decline. 50% in the S&P, 84% in the NASDAQ. And then we had Bernanke for the GFC. Bernanke came in, the market fell 57%. He started the quantitative easing. He started the TARP programs. And then Bernanke announced in 2012, the Fed has pegged inflation, a good growth rate for inflation to be 2%. We never had an inflation peg prior to that. Okay, so the country existed. We got the development of the internet, massive growth in the economy all over the last 100 years without this made up inflation target. And Bernanke got that from the New Zealand Central Bank. After the GFC, New Zealand Central Bank said, we will never allow inflation to get above 2%. That was their goal, to never allow it to get above 2%. Bernanke adopted it, saying, our target is 2%. Right? Because what happens with inflation? You have to understand what inflation is, which the Fed does not. Powell as much told you they don't understand it. He said, and to paraphrase him, we've had to rethink what inflation actually is. He said that several times over the last 2 years. Inflation is the expansion of the money supply. If you have more of something chasing fewer items or the same amount of items, those prices will rise. Prices don't rise because of inflation. Prices rise as a side effect of printing more money. Okay. So when you hear the government and the news media say things like Putin's price hike, right? Or supply constraints, those are inputs into inflation. But the baseline of inflation is printing money. And the US has $34 trillion in debt right now. We added over $1 trillion this past year. We're running 6 to 7% deficits. According to Biden's own government, the Social Security and Medicare will be bankrupt in less than 10 years from now. And that's based off of a projection of 3% on interest rates. Right now, we're at 5.25 and 0 recessions. Right? So you have to really pull that forward to look at it. You could be looking at a catastrophic financial event in this country down the road. And the way this country resolves problems is we don't resolve anything until it's a catastrophic event, right? But understand how all these things pull together because it'll make the economy make more sense. And we can probably do a whole video on Austrian economics versus Keynesian economics, because modern day government officials, modern day heads of schools, business schools, they're all Keynesians, right? They're all taught, and that's where modern monetary theory came from as well. You can just print as much money as you want. Don't worry about inflation. You have to understand where inflation comes from to battle inflation. And until then, when you have a government just printing trillions and trillions of dollars, because remember, people love to blame the Fed. It's the actual administration that's spending this money. The Fed is just an accomplice, right? In a mafia situation, you have the Godfather and you have the underboss. The Godfather would be the president and the administration. The underboss would be the Fed. They're going to do whatever the administration wants. To put the debt into perspective, at 34 trillion right now, we're 120% of GDP, right? 120% of GDP. In 2008, we had 6 or 7 trillion in debt. So we 4x'd our debt between 2008 and now. And going back to Reagan was the first president, had 1 trillion in debt. Okay, 1 trillion in debt. So that means back to the founding of the country in 1776, over 100 years, 200 years go by, and it took 200 years, all those presidents to get 1 trillion in debt. We added that in a single year last year, a single year. So none of this is sustainable. Nobody in the political field is going to talk about it that's running for president, but it's something that's going to come back to bite you. But until you understand the economic cycle, you won't understand why this is taking so long, because it would be a lot faster resolution if you had the Paul Volcker rip the Band-Aid off, take the baseball bat to the gut, fall over, boom, recession. We would have been done back in 2022, 2023. That would have been it. We would be in recovery phase right now, but because we went the strangulation method, we're just suffering. Prices continue to rise, but eventually the economy will capitulate. So that's the long rant on economics. If you guys want more details about that, you want me to do further videos on that, let me know. There's guys out there that talk about a lot of this stuff as well, like George Gammon. You can give him a listen to as well. But guys, let's go ahead and jump into the charts, because it is Thursday. We have some interesting price action, and you guys want to see what trades are potentially setting up. Lee, let's start the show. All right, guys, this transmission, as always, is brought to you by our two fantastic sponsors, SimpleFX and BingX. Our SimpleFX tournament is kicking off. Cash prizes are available. Even if you are already trading on Simple, guys, it requires a new $200 deposit. It begins March 1st. Click our link in the video description for more details, because we want to make this as fair as possible. So we're going to base it off of everybody's fresh deposit that you can see on the link. You'll see the leadership board when you appear on there as well. Guys, BingX, where you can trade all the cryptos and the markets as well. Look at the video description for the details. I'll pin it in the YouTube comments. Message Lee with any questions in the Telegram. Hope to see you guys all in that SimpleFX tournament. Both these fantastic sponsors will pay for your first month on our Discord. Again, message Lee with any questions. Guys, let's zoom out. We're going to start on the E-mini for the S&P. When you're looking at the SPX here, you can see price at 50.85, but it's good to put things into perspective, right? Put things into perspective. Here's the pandemic plague, as I call it. Here's the plague. Here's the massive rise up. Here's where we are now. This meteoric rise up. Remember, the S&P typically only gained 8 to 10% a year post GFC, with the Fed injecting liquidity, with the government doing massive deficit spending. It gained 8 to 10% a year. We went up 120% in this recovery. We 6x'd our normal gains in the market, creating the bubble. The last video, we played Jeremy Grantham talking about how obvious these bubbles are. They are very obvious, and we're in an AI bubble right now, and we're in a bubble overall in equities. And this is something that eventually will play out. But in the meantime, again, holding two thoughts in your head. Where's the economic cycle going? We are late cycle, but also being able to understand you can trade markets up and down. But understand where we're at now is peak resistance in the markets. And this is something you need to really, I guess, keep in the forefront of your mind. Looking at our fractal pattern, About the S&P, 20% waves up, 8 to 10% corrections, 20% waves up, an 11% correction. We're at a 24% wave up. The S&P finding key resistance right here at that 5100. We hit the peak of 5121 here, looking on the daily chart. This is our 5121 level that we hit, and so far that is still holding. You can see here 5101 is a level of resistance that's been holding for these various daily candles. 5150 would be a breakout level to get to. Another way to do this is to pull the fib this way. Look at it from this W pattern that we formed. 1618, 5121. Okay. So this is the key level of resistance right now. For the S&P to have more upside, you have to come back up off this pattern, break out to the upside, and move up. I personally think we are nearing the top in a topping process. We will get a corrective move, just like we have in the past 4 years cycles, just like in the Y2K cycle, where we will see a retracement. That retracement could come down to 4,800, down to this cluster of candles down here, or our typical retracement that we've had in this whole wave pattern of 8 to 10%. That would take you down to 4,600, where I think we will base and then move for a blow off top. But right now, looking for topping action here in the marketplace, 5121 remains your key resistance. If you look at that from a psychological level, 5150, 5200 would be your above levels. If you start breaking down below 4936, that's where you're going to start breaking down from. We had the first move here in a three-wave pattern on the daily time frame. That could end up playing out here on the S&P. We're at peak FOMO. I think pretty much everybody that's invested, who wants to be invested, is invested. The markets are struggling here, but the longer they accumulate, the longer they consolidate and don't break down, you're resetting all those oscillators with bearish divergence. And if you're resetting those oscillators, you have to be aware the market could just go ahead and break out to our upside. Look, in which case would be looking for that late March into April market peak, just like .com. This is something we'd be looking for, and then the massive sell-off. So those are the two variations. I still expect a stronger retracement prior to the blow off top. Okay, that remains my base case. We jump forward to the NQ. This is the E-mini for the NASDAQ 100. 17,994. We're at peak resistance here of the 1618, 18057. You can see price is struggling here to break out above this zone, even with this, I guess, inflation being in line with what the Fed was expecting, right? We bounced right off of 1857 again. So, we have this topping pattern here. We're waiting for a rollover. That catalyst could be Powell talking next week. Powell's doing his testimony next week. He's talking next week. We'll see how that plays out, if he comes off bearish, bullish. But when you look at the momentum and everything, the NASDAQ 100, right? This is based off of, if I look at the breadth here, based off the 50. You have roughly 60% of the companies participating in this rally in the NASDAQ 100. You can see you were above 85% on the big wave up, and this is part of the topping process. Less participation. If you squish this in, you can look at your momentum. Again, divergences, guys, do not matter until they matter, right? Fewer people can drive prices higher if they're willing to pay higher prices. Look at the momentum divergence as you continue to leg up. But 1857 continues to provide key resistance. And then above that, guys, we have a big gap here to get to 18609. So I have to repull my fibs to get a different reading here, because that's a big gap. What I would look at, again, is the same pattern that we have here. This W pattern that formed, 18,375, 18,7 will be the next two levels up. I don't anticipate that playing out. I think we're at very strong resistance now. I anticipate volatility, but the eventual rollover for some type of correction in the market. That's what we're looking for. And again, the correction, if it's 8 to 10% on the S&P, you could look for a deeper correction on the NASDAQ. And my personal target with this gap right down here as well in the daily time frame, be looking around the 16K region. And if the NASDAQ doesn't fall as much and the S&P doesn't fall as much, for instance, the S&P goes to 4,800, then I'd be looking at this next cluster of candles, even without the fibs, 17K. My core target remains 16K for the corrective move. Then boom, base, blow off top, look for that peak, sell and go to the beach. That's my plan. That's my game plan for the marketplace. Looking at the baby S&P, the Dow remains at peak resistance, 39,277. You got up to 39,343. You're currently at 38,922. Again, looks like topping action to me. Look at the oscillators here. You have divergence on the money flow, divergence on the momentum. Again, doesn't matter until people start actually selling. If we move forward, look at the Russell. Russell needs to break 2097. Let's call it 2100. Needs to break 2100. You have rotation going into the Russell. Remember, a third of these companies are zombie companies. This also consists of regional banks and things which would be under pressure. But when you have money managers on TV giving you the sales pitch, well, the Russell's still 15 to 20% down off the all-time high. There's gains to be had. It's going to struggle here. When it will not struggle is if my TA plays out and we get this pivot. We have to move down. We get the pivot back to the downside, 1813, right? Then we build our W pattern, move up to our higher level targets, whether that's 22, 2300 on the Russell. And you could call this, again, you could call this a big cup. You call this a cup and handle pattern, looking for the pullback and the explosive move back to the upside. I think you're going to have a lot of resistance here, which is why you're getting a lot of wick. Lee, I said wick, getting a lot of wick here on this candle. This is a strong resistance zone for the Russell. The market's still not ready to capitulate yet. Let's go ahead and look at NVIDIA. NVIDIA is stuck underneath $800, remains your key resistance, which is my 1618 target. You got to 829 or 823. You remain below $800 here on the daily time frame. If we put this to the 8-hour, you get some more candles. See what this looks like. Looks the same as a daily. Let me put this at a 5-hour. So what I wanted to show you was, again, the three-wave pattern that's forming here on NVIDIA, right? You have your explosive move up, move down. Now you're trying to get this rebound move up. If this ends up rolling over, you get a three-wave pattern, but you still need a catalyst to drag the markets down. And the catalyst could just be time. And when the algorithms were probably all maxed out long now, retail's all in there, buying tops as usual. When the realization comes that the market needs a breather, that rotation's happening, that some type of reset's happening, that's when you get the catalyst for the pull down. And that pull down, guys, I believe will be bought up massively. I know people that have similar views to me about TA, but they're viewing this as when this starts pulling down, they view it as the big crash. It's a possibility. But when you look at sentiment, when you look at FOMO, when I look at the 3-month 10-year yield curve, still over 100 basis points inverted, the last 4 recessions, the 3-month 10-year uninverted. That's when this shit hit the fan. Until that happens, we have time for this pull down, the buy pigs step back in, buy everything back up. They're getting discounts on the Mag 7. Boom, it all goes back up. Then your euphoric blow off top. We look at Bitcoin, guys. Looking at Bitcoin on the 3-day charts. Here's your previous all-time highs. A couple of things I want to show you here. This is interesting. I want to walk you guys through this. So we're looking at Bitcoin, and you can look at we've gone over the wave patterns. I'll show you again. But you look at the wave. You have your wave up here, right? Your wave 1, your wave 2, your 3 waves to a top potentially. When I look at this for the projection of where this movement could get to, pull this here. Come down to our previous diamond pattern accumulation. This is where we shared the long October 23rd, right? Look at the breakout. If anybody still held that long, let me know in the comments because that's freaking awesome if you did. This was a 55% move up to our first target. Then we had a 21% short drop. And then, of course, this big breakout we talked about on YouTube. But look exactly where it hit, right? 64,299, the 1618 harmonic expansion. Understand, Fibonacci is the measure of proportion, okay? So what I'm looking at here is these independent wave moves. Let's go ahead and draw this out. We think better with pictures. So let's look at this. You have the move up 105% first wave. Then you have your retracement. Then we have the move up again. 102% second wave. Well, the third wave and the 3 waves to a top and natural law of trading right now is at 66%, but it's hitting the 1618. Where I think this is going to go eventually, we may pull back on Bitcoin. We'll talk about that in a second, is right up here to that 75K range. Will bring you yet again market symmetry between 73 and 80K in the marketplace for Bitcoin. Okay. That will give you market symmetry for that last wave before the final top. Now, I'm telling you this as realistic targets. I understand there's people on YouTube right now with 400K targets. 500K targets, 700K targets, million Bitcoin. I get it. I'm talking about realistic trading probabilities for Bitcoin. We have resistance at 64,299. Could that be the top before the retracement? Let's look at how the previous tops played out. Something I want to show you here, talking about market geometry. From the all-time high, that first one to the second one in this cycle was a 6.5% increase. You see that? 6.4%. If you take the second all-time high, you come up to the 6.4% again. Let's just do that. 6 spot right here, 6.7% takes you right to 73K. Do you see that? Right at the same level where your 200% retracement is. See that green line intersects perfectly with the fib. Why is this important? A couple of reasons. Let's look at this. If we were going to get a retracement, if this is the top, we have to see this get built out, right? That's how I trade. I trade with patterns. I don't just trade because we hit a number, but I trade with patterns. We have to see this get built out, have some volatility here. When we're looking at this, if this was the top, where would it retrace to now that we have this next leg higher? Well, guys, the easy answer is right here, this cluster of candles. And I'm looking at the 786 here at 43,683, providing a ceiling of the cluster of candles. So let's look at that drawdown. This drawdown, if this is the top right now before a key retracement and a bigger blow off top, it's a 32% drawdown. We know Bitcoin previously did 20+% drawdowns here in form for these prior waves, 24%, 23%. We know that it already did these retracements. So it could come back down to this level. It could stop here at the top at 48.9, but I think you get a retracement before you get this final move up. And when I look at this from fibs, and we're looking at this is a projection here to the 1618. Let's do a projection for that last wave and see how accurately it tracked. When we look at this from fibs and we see the projection, where do we get to right here, guys? The 200% retracement, 48,196. And look at where Bitcoin got to, 48,986 within $700-800, hit the 200% retracement. So knowing that it can come up to the 200% retracement again, if it's going to have symmetry in the marketplace, it doesn't have to. This is a trading methodology. It doesn't have to, but if it does, it gives you higher probability trades. Knowing that it can do that, then let's talk about where it could retrace to. If it retraces down to this level, 48,986, right? So basically 49K. If Bitcoin pulls down and then pumps back up, look at your harmonic expansion. The 1618 lines up perfectly with the 200% retracement, meaning what? Meaning Bitcoin would do this move. It retraces, it bases, it comes back up, finds that resistance at 73 to 75K. That's your top, the exact same percentage gain as the previous two all-time highs, lines you up 73, 75K. If you have a more explosive move, I would be looking towards that 80K level. If you have a deeper retracement, meaning you don't hold there at that level of 48,986, let's see what that would do for the 1618. Where would that bring it? These are just projections, guys. If we come down to that 43 level, which would be your mid-40s, now you're looking at the 1618 being up here at 77K. Do you see that? So again, the movements stay the same. Time is more important than price. I want to see when price pulls back, where we base from. Are we basing from 49K or are we basing from the mid to low 40s? That's going to give you a Bitcoin range for that final peak. Again, my opinion based on TA, for that final peak between 73 and 80K. That would be my Bitcoin target. We'll see how close I am after this all plays out over time, because right now Tom Lee has 150K. And all over YouTube, you guys go pick your favorite watcher that you watch. They probably have targets 150K plus. I've seen them as high as 700K right now in the marketplace. But these moves, guys, I believe are going to happen. The alternative move here for Bitcoin is quite simply this. The alternative move is you get a soft retracement, right? You just do something like this. You base, you come up and down, up and down. Eventually you get your higher lows, you coil, you spring back out to the upside, and you come straight up to that 75 to 80K target level, giving us a new kill box to form a pattern. But I think when the markets retrace, Bitcoin's going to retrace. The question is, does it retrace to 49K or does it retrace to the low 40s, 43,683 being the target right here? Depending on that retracement level, gives you that final move up for Bitcoin to be 73K to 80K. Okay. So that's where we're at on Bitcoin right now. Let's see how Solana is doing. Solana is doing exactly what we talked about. You took out your fractal, you came up to our exact target box, our kill box that we wanted to see, 131 to 139. Solana wicked all the way up to 134, and that's where it's at. It retraced down to 129. So again, finding resistance in here. This is a 3-day chart. So what I would like to see going down to a daily chart, give us a pattern, right? If everything's starting to top, then you can have Solana drop back down, come back up, give us some type of pattern, higher lows, lower highs, some type of double top, something to trade is what I'll be looking for. Or if Bitcoin's just going to base and pump up, then we're going to look at that higher level target up at that 140 range for Solana. As of right now, you had a pump. Your pump found resistance right where we expected it to, and you have one candle. That's all we got right now, guys. These trades, at least for me, these trades take time to develop. And keep in mind, guys, everything I say is entertainment, education purposes only. Do your own due diligence when trading. What about Ethereum? Ethereum pumped right up towards our target we've identified here. We had 32.10. We hit it. We have 35.75. Told you if Bitcoin gets to its target, you can see Ethereum get to its target. Didn't quite get there. It got to 35.29. So it's a little bit short. We'll see if we can come up and wick this. Watch 35.75, but watch for the topping action in these coins. If Bitcoin is currently at a top looking for a retracement on the daily, you can see you found your resistance. So you're going to get some topping action. You're going to get a reaction candle, a retest of your highs. And then what it does after that, does it make a lower high that's going to break out more to the upside and confluence with Bitcoin? Or does it start doing this? Does it retest, come back up, make a lower high, start dipping back below, retest the fib, and then start breaking down? These are all different patterns that can play out. Right now in the daily time frame, we have one candle. Okay, so tune in for the Monday transmission to get updates on this as well. Let's jump over to the foreign markets. We have the DAX. Looking at the German market, 17,821 was the target I identified. We're at 17,717. Let's see if we find resistance at 17,821 for the DAX to start topping out as well. May not get there. We'll see if it does. But again, if it starts breaking down below 17.4, you're at 17.7, starts breaking down below 17.4. You want to watch these two levels. If you find resistance up here, you get a retest, you come back up. If you start breaking down, lower highs, lower lows, watch that 17.4 level. It'll be a key level, especially if it gets a retest back to the downside to be traded in confluence with the U.S. markets. If the U.S. markets break out to the upside, the S&P flips its 51.21, then I would be looking for markets to push higher as well. And what about the Japanese, the Nikkei 225? Guys, hit key resistance here, 39,655. Sold off some. Again, this took over 30 years to finally do. When you look at this chart, oh, Lee, throw up that slide. I hope people stuck around for this. Throw up that slide. Look at this chart. So that's the 1989 peak. And I do this on a snapshot because and trading view doesn't let you go back that far. 1989 peak to now. It's a massive, massive double top. Now, the Japanese Bank of Japan still is easing essentially. They're still doing yield curve control. When they end that program, you're going to see selling in these markets. You'll see the yen strengthen as well. But this is going to be fun to trade because of the massive parabolic rise up. But as of right now, all you're doing is a massive double top that took 30 years to make. So we're going to watch this and see how it holds up at these different key resistance levels. 40,000 being a key psychological level, which you're below. You're at 39,110. This moves a few hundred points in a day. So we'll watch and see how we pan out here. Check our indicators as well because we're resetting for the next wave back up. I think that could be your 40K wave. We'll see how the market handles it. Guys, hope you enjoyed this transmission. Be sure to like and subscribe. Consider checking out our Discord. Consider participating in the SimpleFX tournament. It's going to be a lot of fun. And I'll talk to you guys on the Monday transmission. Have a fantastic weekend, everybody.